Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Today's Teaching Tech Tuesday. I wanted to talk about some of the common pitfalls and traps people tend to get themselves into during a bullish market period as we have some positive price action on Bitcoin here. I'll talk about what I'm doing, allocations. I can give examples of what I'm doing, but each person is different. Each person has different goals. Each person has a different style. You may emulate some person's style that you find successful and it doesn't work for you. You may emulate some person's style that's extremely unsuccessful generally, but extremely successful for you. So we're talking about how people fail, essentially. What I've noticed in the past decade when I see people trade, what they do wrong, especially in crypto, where it's feels to many people like it's high octane all or nothing, when if you do it the right way, I don't think it needs to be high octane all or nothing. You can have your size appropriately risked. You can be on the correct side of the trades, the exchanges, blah, 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 right? There are ways to do this the right way for a long time, as opposed to one cycle, one and done. I hate crypto. This is the worst. I lost my life savings. My wife's divorcing me, right? All those fun anecdotes we hear from crypto people on Twitter. So these are things to avoid, right? Not having a plan is easily up there with number one for me when I hear from people. They see some narrative and they fly to it and they go all in and then it blows up, or they get attracted to some nonsense altcoin that promises them utopia and it doesn't work out, and they're a community member, they stay in it forever. So you need to know what you're doing. Obviously, DYOR, do your own research. Bitcoin's been here the longest. It's been the most successful. It's been the most battle tested. It's the most anti-fragile. There's a reason it's remained number one since existence, and many alts over the years have just completely disappeared off the face of the planet, despite having a hot looking chart initially, or a community, or choose your adjective to describe why people flocked to a certain thing. Okay. I mean, that's just basic 101 type stuff. Dabbling in low market cap gems is totally fine, but please, don't do it with your entire stack. Everything on exchanges or not understanding custodial risk, not your keys, not your coins, is very real, especially when we're talking about people on Mt. Gox, people on FTX, people on some random DEX platform that gets hacked, people on some random DeFi platform that gets hacked. The people that have been here the longest and protect themselves from these issues have multiple different wallets, hardware wallets, software wallets, multiple hardware wallets, multiple exchanges, right? You're not always constantly reliant on a single point of failure. That's the biggest thing. So you need to diversify from failure, because the industry is still quite new. It is rife with scams still. There are plenty of issues. There are trusted actors like Kraken. There are things that are higher on the trust ladder, okay, than others. So you definitely want to size your allocations to those exchanges appropriately to avoid custodial risk. Something else I see people run into is they don't know or understand the platform. They don't understand the OKEx liquidation engine. They don't understand clawback. They don't understand the BitMEX liquidation engine. They don't understand how DeFi liquidity works for certain perpetual products. They don't understand how fees are eating them alive. Kraken, certainly for me, has the best fees of any centralized exchange. So you need to know what you're trading, what the liquidity is at any given time, and adjust accordingly. You can't just go into this blindly and say, yes, okay, I'm going to trade some random altcoin on some random DeFi platform through some random bridge, and then expect to be able to on and off ramp and close positions. And I mean, just today I'm trading on GMX, right? Trying to close a position and it wouldn't close. I'll talk about this in a second, but if you're using DeFi, or if you're using an exchange that goes down often, you may get thrown errors. You may be unable to execute on a plan that you had, and you need to be able to be ready to have an audible, right? And figure out what you're going to do. And really, you get this through repetition on any given exchange or through DeFi, right? Again, it's different for everybody. So if you're on Schwab or something, or some centralized legacy platform trading non-crypto native products, you're probably going to have an easier time on trading execution and liquidity, but there can still be issues there. Something else people run into is, not checking their own sentiment. There's this running joke on crypto Twitter where people looking at Zillow, right? People looking at buying homes or going on vacations or some extravagant lifestyle, delusions of grandeur type stuff, right? That can be a great sentiment check for yourself and for other people when you notice it, right? Everybody's getting rich and you're not, like that. Those type of headlines. We're certainly far from that in mainstream media. Currently, we're still talking about, falsely, by the way, how crypto's funding Hamas in this multi-million-dollar scheme, or you're only paying for assassinations if you're using crypto. I mean, just absolute crazy stuff. That definitely isn't the case. So we are definitely not there yet on the euphoria side of things. But for some people, it's just showing your massive profit, right, to somebody, or tweeting about your positioning or whatever, right? That for a lot of people is a great sentiment check. Like, okay, maybe it is time. I'm celebrating this too much. Maybe it is time to take some off the table. Another problem people have is holding a position too long. I'll give you an example today for me on this DTCC news, if you're unfamiliar or hear about this video years from now. So the DTCC put the Bitcoin ETF ticker on their website, indicating that it's getting closer rather than farther away from actually existing. The market went off on that in after hours US yesterday. And to me, because that news kind of drove the run in the very near term, seeing that come off the website today, as silly as that is, right, was a signal to me like, okay, look, we're almost to my target on Solana here on the leverage side. I need to take this off the table. Can I hold through this multi-week thing? Can I ride the waves? Sure. But in the moment, I think it was smartest for me personally to take some off the table. So that's what I did on the leveraged side of things. No one went broke taking profit. Okay. You need to be able to let the runners run, while at the same time understanding that if we're up 30% in a week, 50% in a day, whatever it is, like, yes, we can see pullbacks. That is normal. That is common. People profit take all the time for any reason. Something else historically that people have run into is they're not understanding that, certain alts are maybe up 50% with Bitcoin up 80%, right? They don't understand the relative value between the less risky higher cap stuff versus YOLO 420 blaze it random coin, right? Where they think they made all this money. They love the community. It's going to be amazing. They're going to hold it forever, right? But you still may, at the end of the day, especially after a multi-month cycle or multi-coin cycle, end up just losing money versus Bitcoin anyway. So it's kind of like double Dutch, right? Like jumping rope. You got to decide when to get in, when to get out without tripping yourself up. Obviously, I'm not saying you can't trade this stuff or you shouldn't. It's just, look, as long as you understand what you're getting yourself into, totally fine. But don't assume that some Bitcoin fork is going to overtake Bitcoin, right? Is it possible? Sure. Is it likely? Probably not. So if you're losing money versus Bitcoin, you're still losing money, right? You could be doing better. That isn't to say you aren't doing well, but you could always be doing better if you're not allocating appropriately. I see a lot of people celebrating alt positions and not understanding, Bitcoin was up 12% yesterday, right? Did your coin make 12% yesterday? Did your coin make 20% in the week or whatever it is on Bitcoin? And then maybe a less common one, definitely common for me early on, especially if you have a smaller stack, not taking enough risk. I hesitate to even bring this up because most people don't have this problem. Most people, I think, are on the other side of the coin where they're taking too much risk, but not taking enough risk or having paralysis or, again, mismanaging your sizing and your risk equation, staying in too much cash, waiting for the dip, right? And the dip never comes, that sort of thing. So that definitely can be a problem for some people, not most people. But a way around this problem is to partition buckets of allocation and having multiple strategies. I'll talk about that more in a second. At least for me, again, I'm not betting my entire stack every single trade idea, right? I've got dollar cost averaging, I've got cold storage, I've got hot storage, I've got exchange stuff, I've got DeFi stuff, I've got cash yielding, right? You're doing a bunch of stuff. And that for me helps say, okay, this is my risk bucket. It's okay, self, to take risk with this bucket of money. That's what this bucket is for. This is the risk bucket. This is the YOLO 420 blaze it bucket, right? Or this is the low cap gem Shiba Inu bucket. But it's not the entire house, right? I'm not betting the farm on Shiba Inu every trade. Before we talk about the biggest problem for traders, which is overtrading, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. And Bitcoin here, quite volatile in the up direction, obviously, over the past 12 hours, 24 hours. RSI is starting to scream a little bit. Just some basic TA on any given range. Take the high, take the low, use the Fibonacci tool, and it will give you a 1618 and a 2x basically extension. This is generally the range I use on any vanilla setup. It's typically where we see the next consolidation or pit stop or reversal, right? Things to look for. I think the DTCC listing silliness has helped turn this over a little bit quicker than that level, at least in the near term. And we were running rather hot, right, yesterday. So I still like that as a very near-term target. And it's going to be choppy and look very interesting, right? As we're moving 5% in an hour or something up and down on Bitcoin. So for overtrading, this should be fairly obvious. And when I get to successes of traders, you're talking about a trading journal. You're looking at the number of trades you take in a month, right? You don't have to do this frequently, but you should have some sort of documentation. Ideally, you're taking a sentiment check weekly. You're taking some notes. You're saying, I'm looking for XYZ. I'm watching XYZ setup. It's the reason I do Setup Sunday. It helps me orient myself for the week as my own trading journal and say, okay, this is what I expect, right? When we talked about 28K as a level for Bitcoin a week or two ago being important, I'm not looking for shorts, right? If we're above 28K, I knew that in advance. And that certainly helped me position appropriately for what happened over the past 48 hours, let's say. So you absolutely have to get this mentality out of your head. I'm a trader. I need to be trading. What's the next trade? Which market, which exchange, which altcoin, which airdrop, which DeFi lending platform, Yahtzee, blah, blah, blah. Like that, just, you need to relax because there are going to be so many opportunities. The last thing you want to do is spread yourself super thin, misunderstand the risk, not investigate what's going on with this stuff appropriately. And that's how people got into BlockFi and Celsius and Luna, and they're watching TikToks and they're hearing about this neighbor's getting rich and, I'm paying my car off with blah, 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 right? So you definitely want to maintain focus. You definitely don't want to use your full account on any leverage trading position, okay? Again, if you're doing that, you're poorly sizing, you're not understanding risk, you're not understanding bankroll. There's tons of variance. You don't want to rely on a single trade for your entire investment, okay? Yes, concentration helps build wealth. Diversification helps keep it. But especially if you're new to trading, avoid this high leverage stuff because it is a siren song for most people that quickly explode. Late longs, FOMO shorting because the trend is wrong. This doesn't make any sense. The chart doesn't look right. I want to trade short. I'm a better shorter, so I'm going to keep shorting. I've seen people blow up every bull market because they are shorting. Every single pop up, every single time, right? The trend is your friend. The trend is not your enemy. And the trend is the trend, right? It could be bearish, it could be bullish, it could be neutral, but that's the market. So trade the market you have, not the market you want. And the last thing you want to do is, especially on days like yesterday, right? Start FOMO leveraging 50x long, 34.5K or something, thinking we're going to go another 10% higher. The first thing I did yesterday after the day closed, I looked at the monthly and quarterly average moves historically. That's another way to just sort of get a quick sentiment check. Are we in line with expectations potentially for previous cycles, pre-halving, right? Just do a sanity check. Is it possible to go another 50% higher, right? Sure, but probably not. So you definitely have to be careful in that department. Obviously, the high leverage stuff is just a massive no-no. There's a time and a place, and as Kobe has said famously, leverage is for poor people, and it's true. As you accumulate cash, you can certainly massage a spot position easier than a high leverage position. You can sleep at night, you can travel, you can not worry about being at your computer 24/7, right? Me personally, 5x or less is my sweet spot. 5x is plenty for me. In my early days, I traded on 10x. And I think there's some merits to understanding high leverage trading and knowing whether or not you're right or wrong extremely quickly, but it can be very, very dangerous sliding that bar to the right, trust me. Another one I see a lot is revenge trading. This was a wrong trade I just made, so I'm going to try to make it all back. And again, that goes back to what are you doing? You're over trading. You're taking too many trades. You're not understanding your own demeanor, sentiment, negativity, right? That's all coming into the equation versus making smart trades, taking smart positions, that sort of thing. The whole trading alts over majors, I kind of talked about that already, but again, this is wrong focus or timing. If LTC was getting an ETF and it had access to multi-trillion-dollar institutional capital market, great, let's focus on that. But we are not getting that right now, okay? So being a little bit tuned into the narratives is certainly helpful. Where are the flows coming from? Who's here? Who's buying? Just basic questions. Did retail just get 3 stimmy checks and is sitting at home with nothing else to do? Okay, maybe alts are the move. Maybe NFTs are the move. Are everyone on Main Street having trouble paying bills and paying credit cards and car loans and student loans and mortgages, right? Maybe we're going to be focused more on institutional money, that sort of thing. Something people definitely don't think about, including myself, enough is taxable events you're generating with this stuff. Whether or not you're going in and out of positions too much, or you're not understanding short versus long-term capital gains, that can just eat you alive come tax season. This is dependent on country and state and blah, 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 right? But something to keep in mind is be prepared for the tax man when that day comes. And that may also help slow you down a little bit as far as all these trades you're taking on all these exchanges, right? People who've lived through a nightmare of a tax season know what I'm talking about. And then the obvious one I talk about all the time is just trading on too low of a time frame. Focus on, especially if you're new, this is what I found successful. Focus on high time frames. Focus on a specific time frame. Maybe that for you is the 4 hour. Maybe that for you is the daily. I think the weekly is probably a little too slow generally for most things, but I certainly look at weekly charts. I think the 15-minute is too quick, too much risk, too much variance. My personal sweet spot is about the daily. For most charts, for alts, slightly less, maybe like the 12-hour. But again, part of that's understanding what works for you. What works for me doesn't necessarily work for everybody. And then just as an example of like how we can allocate to things appropriately, this was something that I did with Ledger a couple weeks ago. I was asking him what he had in his allocation stack because I knew it was different than mine. And for me, this is like, probably 85 crypto, 15 on the legacy side. But you definitely want to think about and loosely calculate what is the allocation I'm at here. Am I too out of whack? Like, is my link stack suddenly massive and I'm not rebalancing every once in a while to harvest those gains a little bit, right? Or am I just in all in Bitcoin because I'm a laser-eyed maxi and I believe that's where the world is headed, right? But this is back to the idea of partitioning. I've got this, I've got that, I've got this exchange, I've got that exchange. And I always say I'm saving myself for myself, right? I'm not all in all the time, 100x leverage, certainly diversified, right? I've got some old exposure, not a lot right now. I've got some legacy crypto exposure, then some just vanilla legacy positions. But this is just an example. This allocation is probably off as of yesterday, right? It's probably 99 crypto, 99 Bitcoin percent wise based on that move. And this can be through DEXs, through DeFi, through centralized exchanges, whatever, right? But you need to have multiple avenues. So here's an example of a successful trading stack. I have to mention two-factor authentication because the quickest way you'll see, such and such account got hacked. I lost everything. Well, did you have 2FA? No, I kind of forgot, blah, blah, blah. Well, guess what? If you have 2FA, it is extremely hard, not impossible, but extremely hard to get into your accounts, right? And this is all accounts, not just crypto accounts. This is, Twitter, Instagram, your bank, right? And you definitely want to use unique passwords because one of the ways that people will get into your account from a OPSEC perspective is they will find your other accounts, figure out those passwords, and then attempt those passwords on similar accounts on the crypto side. So just protect yourself from the obvious and definitely never enable SMS 2FA. If you're getting texts via 2FA, try to disable that at all costs, especially on Twitter, especially on Gmail, your email accounts, whatever. Because if you're SIM swapped, it's the first thing they're going to do. is a SMS 2FA to unlock your accounts. Not your keys, not your coins. That's obvious. Look, don't keep everything on an exchange. If an exchange has warning signs or warning bells, take the coins off. Don't hesitate. Move it somewhere else, right? The mix of cold and hot storage is certainly always recommended. Some people have lost everything in cold storage, right? They're throwing it in a landfill, looking for it to this day. Depending on your size, you're using a third-party cold storage solution or whatever, right? But you're trying to mitigate these risks. You're trying to mitigate counterparty, custodial, your own trading risks, right? And another part of that is just mixing your allocation types across multiple avenues, We're not trying to be overly cumbersome with this stuff, but we're just trying to smooth out the risk a little bit, flatten the curve, if you will. And for me, I found successful. I'm always mixing. Sometimes, I'll be in DCA for months. Sometimes I just decide, okay, now's the time to start lump sum buying. I'm in spot. I'm doing some minimal derivative stuff. That way I can have exposure to anything at any given time, right? If I see something that looks good on the legacy side, I'll take that trade. If I see something on DeFi that I like, I'll take that trade. And you want that optionality, especially in a bull market when maybe certain avenues of the ecosystem start popping off that hadn't previously. And this is something I mentioned a couple of weeks ago, but you want to have multiple accounts across different crypto exchanges for your country, regardless of what your feelings are about KYC. If you plan on ramping and off ramping, you need to be known to the exchange, right? The best time to do that was yesterday when the support staff isn't flooded with requests, but you need to have the full ability to put cash on the exchange, move it around, take cash off, move it around. I saw people yesterday complaining about certain exchanges gating their withdrawals, and that may happen. Exchanges do all sorts of crazy stuff, okay? Most of it for regulatory reasons. Maybe you came up on some red flag chain analysis program that said, this person was doing illegitimate things. Okay, so a great time to test that is before you start to move money on or off in a bigger way, right? And the trading journal thing is super important. Most people don't do it. It's super simple. Again, you can do it on Discord. You can do it on a private Discord. You can do it on a private Telegram with yourself. You can do it through Microsoft Office. You can do it through Google Word, whatever, right? It doesn't matter. But for me, I do it through YouTube, The goal here is to find out what isn't working and eliminate it. Find out what is working. Keep doing that, right? The best way to figure out what is and isn't working is to make some sort of documentation, paper trail. Maybe it's a whiteboard behind you. Maybe it's a physical journal that you write out, right? Plenty of ways to do it. And then in a bull market, you definitely want to pay yourself. Have some financial goals in mind, whether it's a car, a house, your parents' house, a vacation, some long-term yielding play, right? Whatever it is, okay? Have something in mind. Have a pie in the sky number just to get you thinking, get the juices flowing a little bit. And really, to be successful, it's kind of like driving. When you're driving, you should be at least, right? Looking at the side view mirrors, looking at the rear view mirror. Whereas you're out, if there's an accident at this intersection, where am I going to go? If there's an accident on the highway, I'm going 85 miles per hour. Is there a shoulder? This truck is changing a lane. What do I do, right? You need to be constantly looking out and being a defensive driver, in the trading sense, and understanding where your weaknesses are from a trading perspective, operational perspective, custodial perspective. Where can this fail, right? Always be prepared. And then finally, I just want to leave you with one thing I brought up before, probably a long time ago. There was this great post on Bitcoin markets in November 2013 from a poker player. I'll put the link in the description of the video. And a lot of poker players tend to be decent traders because similar skills are involved. Sizing risk appropriately, understanding bankroll and emotions and your personal style, right? These are just the bullet points, but the simple list is pretty good. No strategy, no single strategy is king. Now, this person obviously didn't know about the cloud, but we'll leave that out of the conversation. Remove emotions, properly size. Don't think about trades that happened in the past, profits you could have made, trades you could have taken, right? It's always about the next trade and making the right decision now for you, as in you're not taking a 50x long if you're about to go on vacation, right? Maybe you need to pay attention to that more than once every 7 days. Or you're just here for the DCA and you're going to pay attention to 2025, right? You're not going to get worried about the day-to-day. That's fine. Understanding that stuff goes wrong all the time for any reason, right? So you need to have a large sample size on any strategy to understand what really is and isn't working. Losses always feel worse than wins. And then really until you can effectively spend your money, right? Cash out, not saying that that's a goal for everybody, but until you're fully off ramped and the money's in your bank account, assume it doesn't exist, right? Because you can get snagged for all sorts of reasons currently in the crypto ecosystem, especially on the banking side, if you're using crypto native stuff. So I hope this was somewhat helpful for those that needed to hear it, to get them on the straight and narrow. The easiest way to lose all your money, not having 2FA, keeping all your keys on one coin, on one exchange, all your coins on one exchange. So check those two things off your list. First, avoid high leverage, avoid trading your entire stack every trade, and definitely keep a trading journal once a week at the very least. Just write down your thoughts, write down any trades, write down targets, long-term, short-term. How do I feel, right? Am I fearful? Am I greedy? Am I indifferent? And hopefully these very basic steps can help you not lose money in a bull market. That's all I have for this one. Like, dislike, comment, share, subscribe. And if there's something I forgot to mention, definitely mention it in the comments below. I read all the comments. And happy trading.